our webinar today is about the Coronavirus Business Interruption Loan Scheme, or CBILS as it's widely referred to. I'm David Angus and I'm the Sales Director of Braemar Finance, and I'm hosting the event today. The purpose of this webinar is to inform SMEs about CBILS and in particular why CBILS could be an attractive offering for businesses impacted by the COVID-19 outbreak, be that through lost revenue, cash flow disruption, unforeseen or unbudgeted costs, but also potentially as a platform for funding growth and opportunities. We are going to focus more on cash flow funding, loans and asset finance during today's session. Those of you who are new to Braemar, we are a direct funder. We're part of Close Brothers, which is a FTSE 250 listed bank. And Braemar specialise in the funding of the professions. It's something that we've been doing for over 25 years. So our clients are typically medical professionals. That in itself is quite broad, but we have particular specialism in professions such as dentistry, veterinary, optical, pharmacy and the nursing home sectors, as well as other professional services covering accounting, legal, funeral, architectural sectors and beyond. Now, if your business is not directly engaged in the profession sector, the areas that we're going to cover today will probably still provide you with some valuable insight into CBILS and how this may benefit your business. And as we're part of Close Brothers, we do have other specialist teams who cover industrial sectors such as construction, waste and recycling, engineering, printing, transportation, to name a couple. So please reach out to us, as we may be able to help you by referring you to another part of our business who can provide you with some specialist expertise and knowledge from within the bank. So I'd like to introduce our panelists today. Well, Sarah Parkins is our marketing manager. Sarah's actually coordinating the event for us today and making sure the technology continues to work. And she'll also be picking up questions and things like that and introducing them to Bernie and myself and Lauren throughout the event. Lauren Rhodes, who is our strategic initiatives manager, who works with Close Brothers. Lauren has been instrumental in the delivery of the CBILS package as an offering, working very closely with Bernie and his team at the British Business Bank, not just in terms of the integration with the British Business Bank, but also in terms of our own processes, so that delivery to our clients is as seamless as possible. And then lastly, Bernie Skivington, who's from the British Business Bank, who's the Director for Guarantee and Wholesale Solutions. So Bernie, I'd like to start off directly, really, if we could get straight into actually understanding what the role of the British Business Bank is, and then more particularly, what is CBILS? I mean, what is CBILS? And let's have a look at the features and benefits that it can provide SMEs.
Hi, thank you, David. Yeah. Hi, everybody who's on the call. As David said, my name is Bernie Skivington. I'm the Director and Head of Origination and Relationship Management at the British Business Bank. Just to give you a little bit of background, maybe quickly, I've been at the British Business Bank since the start, which is actually around 2013, so the past 7 years. Prior to that, I was working with Barclays Bank in their asset finance division. My whole career has been in banking, particularly with two large banks, NatWest and Barclays, but latterly at Barclays, as I say, in asset finance. And while I was there, I actually worked in a team that looked after the professional sector. So I've got a vested interest, shall we say, in today, not only because of the BBB and the CBILS schemes, but past experience of working with the sector and having a good understanding of it. British Business Bank is the economic development bank for the UK. It's 100% owned by the government. And its formation came about from the last financial crisis, which seems to have gone off the agenda, obviously, somewhat, mainly by the passage of time, but particularly with the COVID now hitting us, of course. And the bank has been operational for 5 years now. We had our 5th anniversary, actually in November. And our mission is to make finance markets work better for SMEs, and particularly where they're not working well already outside of the main banks, and most of what we do actually in terms of the support that we provide and schemes is outside the main banks. We have a number of objectives, one of which is to increase the flow of finance to businesses. We don't try to compete with the market, but we try to add to the market in areas where finance is not working already. And we also try to diversify the market, which is something that's really important, particularly with the COVID schemes when we come on to those. We also try to make the taxpayers' money work efficiently and provide a return to the Treasury, of course, with every penny that we borrow. And we also act as a centre of excellence or a sector of expertise for the government around SME, which we've been building over the past few years. So that's become particularly relevant around the COVID schemes, of course. Just to give you a bit of background why the BBB has perhaps been asked to support these schemes. You may be familiar, notwithstanding that we've only been around for 5 or 6 years, with a scheme called the Enterprise Finance Guarantee, and prior to that it's called the Small Firms Loan Guarantee Scheme. And it's one of the longest standing support schemes for businesses in the UK. And it was one of our most successful schemes. We deployed something like £3 billion of support over the last 10 years, working with around 40 lenders, one of which was Close Brothers when they joined that programme while it was still EFG. And we would provide around 250 million of guarantees through those lenders to businesses on an annual basis. So that's just to put that into context. What was most important is that the system and process was very well established for that scheme, which is well understood by government. So when COVID hit in March of this year, the Chancellor obviously needed a scheme through which to deploy additional support to businesses in the most efficient and speedy way that it could be achieved. So the EFG scheme, you will have seen that is gone now, and CBILS particularly was built on the rails of that EFG programme, which has meant that we were able to deploy the whole scheme within 4 days. We were working day and night to do that. And we initially worked with the 40 lenders that were already accredited by the bank under the EFG programme. But since that time, we've then looked at ways to get other lenders on board. Initially, it was through banks because they obviously had the systems to be able to move quickly. But I'm delighted that over the past 6-7 months, we've accredited a further 60 or 70 lenders across all areas of the operation in the market, whether it's asset finance, invoice finance providers, fintechs and other alternative finance providers. And we have around 40 banks accredited on the programme as well. CBILS itself was launched in March as one of the original schemes, and I know that's the focus for this particular discussion, but you'll also be aware of the Bounce Back Loans scheme as well, which followed on from CBILS and was launched in May of this year. Because CBILS actually, and we will talk about the positive aspects of CBILS, is a process by which lenders continue to have some risk in the lending. Of course, the government provides an 80% guarantee under CBILS. The Chancellor wanted a scheme whereby he could support particularly micro and smaller businesses in a much quicker way. So the Bounce Back Loan scheme, which provides a 100% guarantee from the bank, was rolled out very quickly, and there's a much kind of shorter process for businesses to go through with what are around 20 accredited lenders under that programme. We also have a coronavirus large scheme, which is typically for businesses with over £45 million turnover per annum, and provides facilities generally up to 50 million, but we have been able to provide facilities up to 200 million for certain borrowers as well. Again, that sits outside typically the SME type space. I think overall it's probably just bringing you up to date across the 3 schemes we've deployed through our now 100+ lenders that we've got accredited, around 60 billion of support in terms of loans that have been drawn down and offered. So, you know, testimony to the need for these schemes and the response that we've had from businesses. It also carries an awful lot of risks, of course, as well, which we are monitoring and following up. But generally, you know, the schemes have done exceptionally well.
Of that 60 billion, I mean that's a massive number to support into the sector. But how much of that has gone into the SME markets specifically?
Well, all of BBLS you can assume is for the SME sector. I think there may well be some larger businesses that could have applied for BBLS if they didn't want a loan of more than £50,000. I mean, that's the important thing about BBLS. It's capped at 50,000, but you don't have to pay any interest or capital in the first year. So and thereafter, it's a very low fixed interest rate of 2.5%. So it's quite attractive. On the CBILS, the largest scheme, we've deployed around 4.5 billion under that program. And it's a much smaller number of loans given the size. But CBILS, which is focused to businesses less than 45 million turnover, so you can assume that's all SMEs, of course. We've deployed around 16 billion pounds under that program. So even though BBLS is arguably attractive in some ways, where businesses need more than 50,000 pounds or access to other things like asset finance and invoice finance, CBILS has been the most obviously successful scheme. And that's covered about 15,000 facilities thus far, an average of about 230,000 each. But they start off at 50,000 for loans, but the asset finance product starts off at only £1,000, which is really important that we were able to keep that when the BBLS was introduced.
But let's get specifically into the CBILS if we can, and look specifically at the product itself, the terms, the eligibility criteria, and also the uses and applications that you've seen, and we can obviously share some of our experiences as well.
Yeah. Okay. Well, not surprisingly, the fact that the scheme was deployed primarily to support businesses that we're going to see a significant reduction in revenues and obviously cash flow impact. The greatest use has been for working capital. It's not easy to always capture the true purpose through the data that we have through which is our portal that our lenders use. But generally, we can see that around 90% has been for working capital. But equally, it could have been used for development finance because it's available for development finance. It's been available for asset finance, so equipment purchases, investment in equipment for businesses, and areas like logistics, commercial vehicles. Not surprisingly, we've seen quite a lot in that particular space, but it represents probably only about 5% of all the lending that we've provided at the moment. I think that that's going to actually have a much bigger role going forward, and maybe we'll come back onto that later in the discussion. But at the moment, obviously, businesses have been shut, locked down. They've needed a way to keep paying staff or keep their businesses running. Whereas as we come out of this, hopefully, particularly into next year, I hope that we'll be in a position to support businesses that will be significantly cash depleted, of course, but will be viable, and they will need to start investing again. And these schemes are going to be really important then, which is why we're looking at a replacement scheme at the moment when the extension of the current schemes comes to an end.
Yeah, and I think that's also worth reminding, based on the Chancellor's recent statement, that the extension period has been extended from the end of November through until the end of January for a CBILS application form. So what that really means is that as long as we are in receipt of an application from a customer for a CBILS application, we still then have some time to process that and make an offer to them and get the funding put in place. Although I would also always encourage customers, if that's something that you're thinking about now, then engage with us and talk to us about it now, and then we can get through that discussion in a timely and also a considered way.
Yeah, it's an important point, David. Just to clarify that, yeah, absolutely. At the moment, and only subject to any further extensions, businesses can apply under the scheme, and that application must be in by the 31st of January 21. We're expecting that our lenders would then have another 1, but hopefully 2 months to the 31st of March in which to process those applications.
Yes.
And then they would then have a further period of up to 6 months to draw down that facility, depending on whether it's a loan or an asset finance facility. So it's really important that businesses understand this isn't a cut-off completely at the 31st of January. And even if we have a successor scheme, if they've applied under the existing scheme, that process will continue.
Yeah, Bernie, and I appreciate there's still some moving parts to be confirmed on it, but my understanding, if we take the previous goalposts, if you like, that were with a loan you had up to 3 months, then that and 6 months for a hire purchase facility, that will still apply. But let's just come back and talk about CBILS itself specifically, and really, if we can help people understand what the benefits of a CBILS package are. Particularly, there's a lot of misinformation about the interest cover and the terms and what's covered and not. So if we can just help inform people about that, I think that'd be a good start.
Sure. Okay. Well, just to cover quickly on the eligibility. I mean, it has to be a UK business, obviously. It has to be a business with annual turnover of less than £45 million to qualify. It must be a business that has suffered under COVID. I dare to find many businesses that haven't suffered under COVID. So it doesn't go without saying, but you need to be able to demonstrate that obviously you've suffered and you wouldn't normally just have a commercial facility. Depending on whether you're having a loan or asset finance, as we've already said, you've got facilities that can be up to £5 million. You can apply for a lower figure. Obviously, you can apply for any amount up to 5 billion, provided you meet the eligibility criteria. And you can come back for further loans subsequently. Under the bounce back loans, you get one bite of the cherry, although the Chancellor's announced a top-up facility. But under CBILS, you can apply for other facilities and through different lenders, but you have to be transparent about what you've already applied for and whether you've already got existing loans, because if you take a loan which is outside the criteria, then obviously you're technically, it's a fraudulent act, of course. So, we'll capture that. So we're looking for full transparency from businesses. The qualification is typically around, the amount is determined up to 5 million, so around double your wage bill for the previous 12 months. It could be up to 25% of your turnover. And if you're a newer business, you'd have to estimate that turnover. Or typically what lenders are doing is taking a self-certification of your liquidity requirements for the next 18 months, which obviously could be a very different amount. So that's kind of the scene setting. You also need, by the way, you can't be a business in difficulty.
Before we explain it, if I can just go back to the eligibility, because that is the business in difficulty is a question that comes up from clients quite often, because we get a lot of clients who think I'm a business in difficulty today, but that's not what it means, and we can explain that. But if I can just go back to the eligibility, am I right, I believe, in saying that whilst there's a lot there, there's also, that's quite broad, because a customer applying only needs to meet one of those criteria. Is that correct?
In terms of application, yes, any one of those criteria, yeah. And as I say, typically it's been, I think the self-certification route has been the most popular one, if you like. But it could be that those other two alternatives are more relevant for the particular business. Okay.
So then, just moving forward, could you also cover the question about guarantees, because that again is something that that is picked up quite often?
Yeah, sure. A lot of our lenders or officers are quite used to asking for personal guarantees from businesses, but under the CBILS scheme, none of our lenders are able to take a personal guarantee for any amount less than £250,000. Anything over £250,000, they can ask for personal guarantees. We will never allow any of our lenders to go for anybody's personal private residence to satisfy their loans. But if they've got other assets, then obviously they can be pursued. And over 250, we would encourage lenders still to seek collateral if it's available, notwithstanding that they're still getting the 80% guarantee, of course. And on the personal guarantees over 250, the lender is only able to seek recovery up to 20% of the outstanding facility, because naturally there's an 80% guarantee to the lender, by the way, which is really important to underline, that still covers that facility. So just to make that last point, the reason I emphasise it is that the government guarantee is never to the actual borrower, it is to the lender itself. So a borrower will always be 100% liable for the facility. It's just obviously if they get into difficulty and the lender is unable to recover under some of the rules we've just discussed, then they will claim under the guarantee from the government.
And that my understanding of that, Bernie, that is really just to encourage lenders who may have retreated and been a little bit more conservative to continue to stand at the front and to continue to support SMEs and small businesses through these hard times.
Absolutely. Yeah.
Okay. You mentioned something earlier, and I would echo the sentiment of that, which is the split that you're seeing between the use of CBILS. I would say that the large proportion of the facilities that we funded have been for loans, be it for cash flow, but we are still seeing some hire purchase funding being done, particularly with regards to larger facilities and larger assets. I mean, predominantly our customers, they don't generally buy big ticket items in comparison to the asset finance sector. But what we also find is that at the time that there is equipment that might need to be acquired, we're seeing a lot of businesses having to spend unforeseen cash and expense in making, particularly in the medical sectors, their practices COVID friendly, not only for the well-being of the staff, but most importantly the patients. And you know, this is unforeseen costs, and CBILS has been a great facility for those customers who need help and support funding that cost. In terms of the facilities themselves, I'd just like to go back and cover off the application process, and just from our perspective, give our clients just a little bit of guidance in terms of how they can go about the application, and also go through the eligibility criteria. So I would encourage anybody who's thinking about CBILS, even if it's just a thought, to get in contact with us. If you go to our contact page on our website, and details of this will be available at the end of the webinar, there's a section where you can put in your county. So if you're in the UK or Wales, enter your county in there. So if your business is based in Kent, put Kent in there, and you'll be introduced to Steve Perbrick, who's our ASM who covers the Kent area, and colleagues up and down the country. If you're in Scotland or Northern Ireland, you'll get, if you put Scotland, Northern Ireland, don't put the county in there, you'll get Gal Cormac's details. And I say that because we've got a lot of experience in our team, and they will help and guide you through the process, because the application itself can seem quite daunting. The eligibility criteria can look complicated, and they will help and guide you through that, and also to ensure that if there are any irregularities, and also give you some guidance in terms of what's practical and what's not practical. Beyond that as well, just, you know, I need to re-emphasise the fact that we are open for business irrespective of CBILS. So it might be for some people that CBILS isn't necessarily the right tool for them based on what they want to do, or for the fact that the facility doesn't meet the eligibility criteria, and there might be other areas that we can help with. We kind of find that a little bit, Bernie, particularly where people have got bounce back loans and they need a top up, which kind of has taken them over the bounce back and into the CBILS, and there's this kind of, we find that there's this area in the middle where sometimes actually us providing a top up loan, rescheduling other debt, actually sometimes gets them the cash flow that they need without necessarily needing to take on more debt, which obviously a lot of businesses are concerned about nowadays. But so there's a whole, other than CBILS is just one piece of a complex jigsaw, and engage with us, talk to our team. There's a lot of experience there. I think our team just within Braemar have got well over 100 years worth of experience. So use that, and that will put you in fine stead. Once we've then gone through the CBILS eligibility process, we can then get into the weeds of the credit application itself. And I'd just really like to re-emphasise the fact that, you know, as a funder, we're not looking for anything more than we would ordinarily look for in any deal, and the information that the team will seek from clients will be in keeping with the size of the facility. There's probably one exception to that, in that we do have a responsibility to the taxpayer, based on what you've commented on already, Bernie. We generally would like to see cash flow forecasts with the CBILS application. We need to be comfortable that if we're using taxpayers' money, that the facility is appropriate, and the future demands on the business can be met. We know that there's a large degree of risk there, and we're used to that. But that is something that we would probably expect in addition to the things that we would normally ask for. So just be prepared for that. That's probably the area where we find that adds a little bit more delay. So I'd encourage customers to be prepared, speak to your accountant, get your cash flow forecast, but engage with us as early as you possibly can, and then we can help and guide you through that through that process. You mentioned also about other funders, and it's something that we can probably come back to. The fact that you can apply to more than one funder, or to a funder for multiple lines, and to make that visible and transparent when you do the application. But I'd also like to reinforce that if you've been declined by another funder, under CBILS, Bernie, you're probably finding that there's a wide array of credit appetite even still. And so if you have been declined by another funder, or you're finding that things are taking a while, it doesn't preclude you or stop you from making a CBILS request to a second funder. And also that just filling in and completing and coming to us and going through the CBILS eligibility process doesn't in any way impact people's credit history or the credit scoring or anything in that nature.
Can I add a point into there, David?
Absolutely, yeah.
I think it is an important point, and you know, I have to remain impartial, of course, around all of our lenders. But whilst we can focus in on the scheme criteria and eligibility criteria, I will add to this that we also, across the kind of 100+ lenders that we have accredited under the scheme, it is a delegated scheme to these lenders, so they all have the ability to have their own credit appetite, credit policies. They are funded in different ways, so their own criteria on what type of loans they can actually provide under the schemes will be different. So you should never assume that, you know, a decline from a particular lender, unless it is for obvious credit reasons, that a business is just not, you know, viable or can't service the facility later, but it may be that it just sits out of their appetite. So, you know, it is worth exploring other lenders if a particular lender isn't able to provide what you need.
Yeah. Can we cover the business in difficulty, because you touched on that, and if you can just give us a little bit more detail in terms of what your interpretation of that is?
Yeah, happy to. It's been a headache area for us for several months, and the goalposts have moved on this. But I guess trying to keep it as simple as possible. One of the criteria is that you mustn't be a business in difficulty, and at the current time, that is effectively at the point of application. Okay, so when we started out on this journey, the accounting date that we were looking to was the 31st of December 19, because that was the previous year, of course. That has thrown up all sorts of headaches in terms of some businesses that might be been seen as an undertaking in difficulty for different reasons, or that since that time they're no longer an undertaking in difficulty. So it's been backwards and forwards with government and with the European Commission, who dictate the state aid rules that govern undertakings in difficulty. So in simple terms now, an undertaking in difficulty is a business where half of its accrued reserves or profits, it's been making losses in excess of more than 50% of its actual capital in the business, if I've said that correctly. Now, it doesn't apply to all businesses. So for much smaller businesses, micro businesses now, which is if you're less than 50 employees or less than turnover of £9 million, or your balance sheet is £9 million or less, and you need to be one or other of the two of the latter, then you actually don't have to prove that you are an undertaking in difficulty or not. So this is for businesses which are larger than that. And under asset finance, it's if your borrowing requirement is less than £30,000, again, you don't need to prove that you're an undertaking in difficulty. Whether the lender has a different view on that from obvious information they've got available to them, obviously, is something that they have the discretion to look at, because they do have, skin in the game in these loans at the end of the day. So we don't dictate to them they have to provide it. But very often our lenders have difficulty interpreting these rules. So we've tried to make it as clear as possible now. So one thing just to clarify that is, if you were an undertaking in difficulty under that definition as at the end of December 19, then at the start of these programs, you were an undertaking in difficulty and you might have been rejected for a loan. However, if subsequent to that, you are no longer an undertaking in difficulty for whatever reason, you've had capital put into the business or more investment, then at the time you apply now, if you were to come back, then you might well be eligible in principle, subject to other criteria. So that's been really important for us to emphasize that to businesses that may have applied previously that didn't get a good hearing from the lender they were talking to. On the other hand, if you're an undertaking in difficulty then, and you still are, you won't be eligible for the scheme.
Yeah, I think pragmatically, if a funder, and this seems to be consistent across the sector, but if a funder is looking at a business and you had applied in February, March, and then said, you're not going to survive, then CBILS is not going to, unless your business has fundamentally changed, then CBILS is not going to provide you with the lifeline that you probably need. I think that's fair to say. What have there been any industries or sectors in specifically that you've seen, Bernie, that have really taken to CBILS more than others?
There has. We haven't published necessarily a lot of granular detail around the schemes, but it's fair to say that, and this probably isn't any surprise, but areas like wholesale, retail, hospitality sector, accommodation, and then construction and manufacturing probably account for 50 or 60% of all issuance under the schemes. And I'm talking bounce back loans and CBILS. Mm-hmm. But very interestingly, I had a look before the call, and the professional sector is probably one of the fifth highest in terms of deployment. Under the old enterprise finance guarantee scheme, the professional sector always represented about 8% of issuance by our lenders. Under the CBILS scheme, that is now 10%. So that's actually quite good, and I'm really pleased to see that. I mean, it's the typical professions, science, and all those areas, but the biggest part of that will be the profession sector. Mm-hmm. And there are many other sectors that might be between 0 and 2 or 3%. So it's an important tool for the sector. So please don't believe that it doesn't apply as importantly for the profession sector. No. And I was just going to add, when you were talking about asset finance earlier, David, we haven't accredited all of our asset finance lenders in the same way, but Close Brothers is one of them, where we've also included sale and leaseback provisions. So if businesses have existing assets in their balance sheet or in their business that is unencumbered, has got equity in them, that is another way in which you could potentially propose a CBILS facility that will release working capital for you.
Mm-hmm. Yeah, I think that certainly would apply to other parts of our business where they have more. I can think of people like our print team where there's large there's large assets that can be financed. I think with our professions sector, with one or two exceptions, we would generally take the view that if we can fund via a loan. That it's easier, it's quicker, it's simpler for us. Generally, the assets when we finance them, that they don't always have high tangible values after 3 or 4 years, and so we would probably, if the need is there, I think we'd probably be far more pragmatic and look to provide a loan in our particular space. I might add, but I know that other parts of the bank would take a slightly different view depending on the sector
Sure.
that they operate in. Have you? A bit of a loaded question, but have you actually seen a change in the application for CBILS? Have you seen any difference in the patterns? Through the summer into more recent times.
Yes, we have. I think it's probably fair to say that, and I don't necessarily think this is a surprise, but when the schemes were first put in place, a significant part of the lending that we have, that 60 billion that's been deployed, and it's a similar pattern across BBLS and the CBILS schemes. But the vast majority of loans, I would say that 2/3 of the lending to date has been deployed between kind of March and June in the summer, March, June, July, and then through August, September, October, it's reduced. I'm not going to use the word tailed off because there's still a hell of a lot of volume coming through the schemes, but a lot of businesses would have borrowed from the initial lockdown, from the initial things, and then of course we came out of lockdown, so a lot of business were able to operate, so presumably their revenues were picking up again. And I think the other caveat to this is that as we go into an extension, and the bounce back loans has got this top up available to it as well, I wouldn't be surprised to see a further spike upwards in the requests. The other thing I think is important to say, David, is that whilst we are focusing on CBILS, a lot of businesses have borrowed under the bounce back loans, thinking that 50,000 might well be enough for them in the current challenge. They cannot borrow more than 50,000. So even if they go for a top up, it's always 50,000. And I know already from lenders that there are businesses that need to borrow more money. And it's right to say you cannot have a bounce back loan and a coronavirus business interruption loan at the same time. So going to a lender like Close Brothers, and there are others that are credited for both programs, those lenders would be able to look at refinancing your bounce back loan and then providing a top up through CBILS, whether it's through asset finance or another loan, to give you the additional support that you need. You would obviously have to let go of the bounce back loan criteria and you would come into CBILS, but you would still benefit from what is called the business interruption payment. So your interest would still be covered by the government in the first year of the loan.
Yeah, and we haven't touched on that, but I just want to cover on those 2 points. So just to reiterate, anybody who and we are certainly seeing this, and that's kind of why I said this is a bit of a loaded question, because I think the initial rush for cash and liquidity was the bounce back, and that was great because it gave people time to breathe and consider the longer term. And I think what we're beginning to see now, and I think this is really good for small businesses, is a much more considered longer term view on my business. And also businesses today are much more informed than they were in March and April when the shock of, for some, closing down and not knowing where the revenue streams were going to come from. Having gone through that, they're much more considered. They know their businesses obviously intimately. They can see the future. They have a much clearer idea of what the need is, and the liquidity of the bounce back quite often isn't going to be enough. So that enables us to come back and give much more consideration. The other, you mentioned the interest. So just to make everybody aware that generally when we sign documentation for a CBILS, it is our standard commercial terms. But the initial 12 months payments are adjusted where the interest, we don't charge the interest, that's offset and covered by the British Business Bank. And then once we get through the first 12 months, then any subsequent periods will then be charged at standard commercial rates. And also, I should also make the point that for us, this is kind of something that we do anyway. But if in terms of cash flow loans terms, we can provide funding depending on the need and the requirement for up to 5 years. But also for hire purchase and under the CBILS scheme, we can provide funding up to 6 years. But the coverage of the interest costs in the first 12 months really does make a compelling argument. I mentioned the cash flows earlier and the importance of that, because one of the other things that we're quite happy to do, and where appropriate, is also to provide step facilities. So even though the facility can be structured as standard profiles, we can also structure low starts, or what we would call keep in touch payments, where there's just a nominal sum coming out of people's banks for the initial periods, normally up to 6 months, and then we can step the rentals up at some point, because at some point people have got to start paying back. But again, that's one of the importance of sitting, talking to my team, looking at cash flows, and making sure that the facility is appropriate and is going to get them to where they need to be, and give them every chance to weather this storm, grow and thrive, which is really what we all want. Lauren.
Yeah, David, I've just got a question actually.
Yeah,
no, you've touched on a particular point around cash flows, and in particular around the requirement for loans and stuff. But we've had a really good question actually from one of the participants that kind of asks, really, we're in a really tricky situation in the current climate at the moment, and cash flows are then very difficult to try and predict. So how far in the future, I guess, would we expect to be looking from a cash flow perspective when we're working with those businesses?
Oh, my credit team are wobbling. The knees are wobbling now as I answer this. I think we don't know how long this is going to be with us for, and what the long-term impact is. But I would expect to see at least a year. Beyond that, preferably, but not necessarily. And again, it's very difficult to say, because it depends on the need, the complexity of the business, or the simplicity of the business. In some cases, a 12-month cash flow may all be that's needed because it's relevant to the application. But that's the thing that my team are really good at, in helping people and guide them through that. And it's not because we want to put anybody through the pain of generating a cash flow. It's because we want to be able to sit around the table and say, are we all comfortable, and do we all understand the business? I was talking to one of my team today about an approval that they've had from credit recently, where actually, based on the cash flow that the customer provided, we actually went back and offered more facilities. One of the things that we're always conscious of is sometimes people are nervous. Sometimes they don't ask for enough because they fear that it's going to I'll ask for as little as I can get away with, and sometimes that does more harm than good. And that's part of the discussion. If you've done a cash flow forecast, it generally flushes those things out. Is it serviceable? Can the payments fall? Because they will need to be paid back at some particular time.
And I think on that note there, David, as well, you've just talked around not asking potentially for enough, but I guess it's important as well to highlight, as part of our application process, that initial application form that they do, we request that they put an amount requested in, but that's not going to impact any credit referencing or anything like that. No. But actually it's our team that's going to look at it in much more detail and really get into the detail about whether or not that's enough for them as a business.
Yeah, I mean, we would always want to, the whole point about us having an experienced team is to sit down, and talk to customers about what their needs are, and is that, and also sometimes is that appropriate, and because there are other things that we can sometimes do and recommend to customers because it's the right thing to do. And we're very conscious of that. We're very proud of the fact that we see ourselves as a responsible lender that lends through all economic cycles, and we can only do that by forming long-term relationships with customers, so that we're here and continue to support them. We're not fair weather funder by any stretch, and we can only build those long-term relationships by giving people good, honest advice and having down-to-earth discussions. And then backing up and helping and supporting them. Any other questions from the floor, Lauren, or anything that you feel that we haven't covered off?
There's a question that hasn't been resolved yet. If you want me to answer that. Sorry, and the question that he's asking is, what safeguards does BBB have in place to ensure that all lenders are applying the same criteria when evaluating a lending proposal? Well, we don't look at the lending proposals per se. We look at applications to become accredited lenders and then delegate the lending to them, obviously. But the question is very good. How do we make sure we haven't got a rogue lender? I mean, the first thing to say is that many of our lenders we already had a relationship with under EFG. And they would have been through an extremely thorough, comprehensive due diligence process with the British Business Bank to become accredited in the first place. That extended into the CBILS program. We certainly tried to streamline that process and make it more efficient. So we looked very closely at banks like Close Brothers because they're PRA regulated. So that gives us an awful lot of confidence they are already disciplined and governed and regulated by a third-party body. You've then got a lot of lenders that are FCA regulated and follow certain rules as well. But then there are also many other lenders in alternative finance platforms, and we've had to do much more thorough due diligence on those lenders also. That has meant that they have either come into the scheme after some time of completing that due diligence. But let me also assure you, there are many lenders that have applied to the British Business Bank that have never been accredited. They've either been really spoken to and they've withdrawn their applications, or some of them have been declined. For not for very bad reasons. They might have been too small, too early stage, couldn't provide what we think that the SMEs are looking for. So the reassurance is that all the lenders we've accredited have been through that process. On top of that, we then have behind the scenes a lot of work and due diligence going on around looking at data, applications around fraud, etc., to see whether lenders are guilty of not doing the right thing. And then we have a completely separate audit process that every single lender is going under, including Close Brothers, which they've been through. And that provides us with a risk-based approach to how our lenders are behaving. And obviously the tools that are at disposal of us is to stop them being able to operate under the scheme. And the ultimate one, of course, is that the guarantee would not be met by the government. I'm pleased to say that we have not found any incidences of that, and we've never had that under EFG either. So I think that's a reflection on the work we do with our lenders to make sure that they're lenders not only that we can trust, but SMEs and businesses can have confidence in applying to as well.
Yeah, just one thing I just also didn't cover on, but I feel that I need to in terms of the application process. There is, when we actually get through to documenting the CBILS facility, there is additional paperwork that we need, Bernie, in order to meet the demands and the audit trail that the British Business Bank require from us. So just to warn customers, there is additional documentation that sits with any facility. But again, the team will take you through that. It's not complex. It's just a few more bits of paper that would need to be signed. But actually, the application process itself, again, we follow our standard facilities. So if once we get a facility into credit through our team, we would always expect to have a decision within 24 hours. And in most cases, we can get documentation out and funded within an additional 24 to 48 hours. So it's a really quick process. If there is ever a delay, it's normally on the front end, actually talking about it, deciding do we want to apply, how we apply. But actually, once we get into the application process, it's normally very slick, and it's business as usual for us. Well, unless there's any other questions from the floor, Lauren, do you feel we've covered everything adequately given your expertise and knowledge?
I think so. I guess I just wonder if it would be good to finish on what we think maybe the next few months are going to look like, I guess. I mean, we've already touched on the fact that obviously after the Chancellor's announcement last weekend, applications have now been extended up until the end of January. But, you know, are there any particular pinch points, particularly, I guess, from your perspective in the profession sector, David, you know, with your team's expertise? Is there things that businesses should be thinking about, looking out for? And what do we think, I guess, for the next few months with the scheme?
Yeah, I think in terms of the profession sector itself, it's still very much an unknown. I think businesses, I mentioned this earlier, businesses have got much more certainty today, and I would just encourage businesses to come talk to us. Get the facilities in place, even if you don't need them, but get the facilities in place in case you do. We're all a little bit buoyed and a bit more spring in our step on the thought that there may be a vaccine and the world will get back to normal at some stage. But the reality is that may take some time. And also just to remind and encourage businesses to think about this, not just necessarily as survival mode, but consider it for opportunities. I know we've got many suppliers who are dependent on the sale of products and equipment, that can really think about introducing and talking to their customers about CBILS, particularly where we're able to structure low start payments, just to help bring those business as usual activities back into stream. I mean, Bernie made a great comment at the beginning of the piece about the amount of money that has been distributed because of the support of the British Business Bank. And, you know, if you think about what the business market would look like if that liquidity hadn't been there, and, you know, for us all to benefit and thrive, money has to flow, money has to distribute, because as soon as the supply of money slows, supply chains and businesses will suffer. I am interested to find out, Bernie, though, what you feel is coming further in terms of additional support once CBILS, if you're able to let any trade secrets.
Well, yeah, I haven't got any trade secrets. I sometimes wish that I was sitting in the Chancellor's office sometimes, because, you know, at the end of the day, he has, you know, kind of full veto on these schemes, and very often if he says jump, we will say, how high do you want us to jump? But we will also go back to him sometimes and say, actually, we might jump, but we'll jump in a slightly different way to what you're imagining, because at the end of the day, you know, we are the organisation that's providing that advice to government, to both to the Treasury and to other government departments around, you know, what we see in the market. You know, I just work on the front line working with our lenders, but we have people right across the organisation. We're an organisation of close to 400 people now. So we have economic people, we have strategy people. We've got our eyes on the market in many ways, and we liaise with all of the trade bodies and other associations that represent businesses and the lenders. So we take account of all of that. And the reason I'm saying that is obviously there is always the enterprise finance guarantee in place historically. That's gone at the moment. And we've deployed an awful lot of money through these schemes. They've been extended twice now. I'm not going to say they won't be extended again, depending on what happens with the current lockdown, etc. But if they are extended, we're ready to continue to deploy the loans under the existing arrangements. But we're also working very hard now to think about a follow-on scheme, the Chancellor announced with the September increase that he would be supporting a scheme, a successor scheme from January next year. Well, that'll be a little bit later now because obviously the extension that's gone through. But we are now thinking about how we take the good things out of what was the original the EFG scheme. What are the things that we've learned now under CBILS and can deploy, to continue to support businesses? And what are the right products? Do we need to restructure the variants around invoice finance and asset finance in any way to make those work better with our lenders? And also the other thing is, these are all governed by state aid rules, these schemes. And it would be fair to say that we're all aware that, we come out of Europe as from the end of December. So, question marks around how those rules continue to apply to the UK. We will do all the thinking on that. And that won't mean that we can't have a replacement scheme. It just means we will think on those kind of issues as well about what is the best way to provide that support to businesses in the most efficient way. And you made a comment earlier, David, about providing these facilities on commercial terms. I don't disagree with that, but what I want businesses to understand is obviously if lenders are benefiting from a guarantee from the government for 80%, there's got to be some obviously adjustment in the risk profile of the lending for that. And you'd be absolutely right. So we work with all of our accredited lenders to analyse the commercial pricing that they offer facilities at. We look at the risk that's involved, both as a reflection of the credit risk, the market risk, the impact of COVID. But generally, all of our lenders then agree with us to take account of the fact that they are getting a government guarantee and it's passed on through that pricing. So another upside of this is, whilst they are commercial terms from each lender, there will always be behind that a consideration around the price that is being delivered, and it factors in the risk and the collateral that is being provided by the government. Yeah,
that's a really good point, that, Bernie. I think I was actually alluding more to the fact that our standard documentation and things like
Absolutely.
that, as well as the terms. And I just reinforce what I said earlier about close brothers and our ethos. We generally as a business grow when times are hard, because we pride ourselves on our ability to help and support businesses through all economic cycles. So and we will continue to do that. That's also something else we haven't touched on. I just want to throw this in that as also is new start businesses. People who are looking to start businesses today. CBILS is slightly more challenging as a concept because there is no interruption if the business is already existing and trading, but we're still out there supporting and growing and helping new businesses start as well. So again, as a takeaway from today's discussion, and I thank you, Bernie, for spending your time with us this evening. Just engage with us, pick up the phone, talk to us, share your concerns, share your plans, and if we can, we'll find a way to help and support you when we're ready to do that now. So I'd just like to finalise by thanking everybody for who's attended. I hope you found the discussion really valuable, and reach out to us, contact us, speak to us, and we'll be there to support you. And thanks, Bernie, particularly, and Sarah and Lauren.
Thanks for the opportunity to join you on this call, David and Lauren, and Sarah, of course. Thanks very much.
Really appreciate it. Thank you, Bernie.
Thank you.